There's one thing on the mind of each and every Aussie right now. It's how to survive the sky-high cost of living. And a little later this morning, new figures are set to reveal how Aussie households are even worse off than they were just 3 months ago. Data from the latest quarter is expected to show extremely weak growth in our nation's economy as more families battle against high inflation and high interest rates. And to break it all down, we're joined by 7 News finance editor Gemma Acton. Good morning to you.
Good morning, Nash.
How important are these figures that are coming out today? What should we expect?
We are not going to learn anything we don't already know from today's figures. We know that economic growth has basically ground to a halt, and this will be further confirmation of that. It's also going to show that to the extent there is any economic growth, it's not because people like you and I are feeling confident to go out there and start spending. It's not because businesses are feeling confident to go and invest. It's because the government's pouring more and more money into things like aged care and health and also cost of living help.
So is this because of our imports and our exports as well?
So iron ore is a really important part of the economy.
Yeah.
Coal prices for those have been coming down as well. But generally speaking, there's just not a lot of economic activity going on. People aren't buying and spending. We're just not seeing that level of investment or consumption.
So whose fault is that?
That's a great question. You can see the Reserve Bank and the government are battling it out at the moment. The trouble is that the economy is very weak. And so often when there's a weak economy, you can cut interest rates to try and stimulate that growth. But when inflation is as high as it is right now, you don't want to move ahead and cut interest rates because it'll just create more inflation. So we're in this really tight spot where economic growth is weak, but we don't really have the option of cutting interest rates yet.
So what do you think the next move will be with the RBA? Because they're the ones that kind of control all the levers, aren't they?
And well, they control some levers. It also depends on how much the government is spending. So the Reserve Bank has one big tool, and that's what they do with interest rates. The government, how much they spend, also really impacts the economy. So it's a bit of a standoff at the moment between the two sides. We'll have to wait and see. But the real key to it all is inflation coming down. Once that starts happening, we can look at cutting interest rates, and that should hopefully stimulate the economy again. But right now, it's a pretty tough spot and pretty bleak for a lot of families and businesses.
Well, hang on. Jim Chalmers says it's not his fault. They're not spending too much.
They're spending a lot. If you look at the statistics about the proportion, what they're spending compared to years gone by, it is a lot. Now, you can offset that by saying a lot of it is going towards cost of living help. So, yes, as we mentioned at the start, sky-high cost of living, you do need that help, but at the same time, it is exacerbating prices in the economy. So it's difficult to move forward from here.
And households are caught in the middle.
Always.
OK, we'll stand by for today's figures. Thank you, Gemma.
Thanks, Sam.